GAAP, a unified set of accounting rules, standards and procedures published by the Financial Accounting Standards Board (FASB), is known as Generally Accepted Accounting Principles or GAAP. In the US, public firms are required to have their accountants prepare their financial statements in accordance with GAAP. Understanding GAAP. GAAP is a collection of widely recognized methods for documenting and reporting financial information together with authoritative standards established by policy bodies, enhancing the comparability, consistency, and clarity of financial information. Communication is the goal of GAAP. Pro forma accounting is a non-GAAP financial reporting technique that may be compared to GAAP. International Financial Reporting Standards (IFRS) are the international counterpart of US GAAP. There are known 166 jurisdictions that implement IFRS. GAAP contributes to the general rules and guidelines that help regulate the accounting industry. It makes an effort to standardize and control the terminology, perception, and procedure applied to accounting in all sectors of the economy. Topics including revenue recognition, materiality, and the balance sheet classification are covered by GAAP. Ensuring that a company's financial statements are comprehensive, consistent, and comparable is the ultimate goal of GAAP. As a result, investors will find it simpler to evaluate and derive meaningful information such as historical trend, data from the company's financial statement. It also makes it easier to compare financial data from various companies. The 10 key principles of GAAP. Principle of regularity, principle of consistency, principle of sincerity, principle of permanence of methods, principle of non-compensation, principle of prudence, principle of continuity, principle of periodicity. আসেন এখন regularity. The accountant has adhered to GAAP rules and regulations as a standard. Consistency. Accountant commit to applying the same standards throughout the reporting process from one period to the next to ensure financial comparability between periods. Accountants are expected to fully disclose and explain the reason behind any change or update standards in the footnotes to the financial statements. Next one, the accountant strives to provide an accurate and impartial description of a company's financial situation. Fourth one, the procedures used in financial reporting should be consistent, allowing a comparison of the company's financial information. Non-compensation, both negatives and positives should be reported with full transparency and without the expectation of debt compensation. Next one, this refers to emphasizing fact-based financial data representation that is not clouded by speculation. Next one, while valuing assets, it should be assumed the business will continue to operate. Last one, entries should be distributed across the appropriate periods of time. For example, revenue should be reported in its relevant accounting period. Accountants must strive to fully disclose all financial data and accounting information in financial reports. principles of utmost good faith, derived from the Latin phrase uberrime fide, used within the insurance industry. It presupposes that parties remain honest in all transactions. Where are generally accepted, where are gap used? A company's financial statement and other accounting disclosure are prepared in accordance with a set of rules and processes called gap. The FASB, a stand-alone non-profit organization, creates the standards. The goal of gap standards is to assist in ensuring the accuracy, dependability, and consistency of the financial data given to regulators and investors. In order to preserve confidence in the financial market, gap is crucial. Investors would be less inclined to believe the integrity of the information corporation offered to them if gap hadn't been in place. We could witness fewer transactions in the absence of that trust, which might result in greater transaction cost and a weaker economy. By facilitating apples to apples comparisons between firms, gap also aids in the analysis of companies by investors.